So effectively, US dollar has become the currency of international trade, right? Commodities are priced in US dollars, commodities are invoiced in US dollars, and the trade is generally settled in terms of US dollars. We basically want rupee to become a currency of choice in some senses for people to hold it as an asset. If you see, generally people are very comfortable holding US dollars because they know that US dollar is an international currency. You can go to any country, exchange it for the local currency. It is universally acceptable. Its value is very steady over a period of time, and there is a general faith in US dollar as a currency.
Someone sitting in India importing something from outside, or there is an exporter who's sitting in India and exporting stuff outside, and then also there is the government and the central bank, just importers and exporters. Like, why should an Indian importer or an Indian exporter invoice in rupees and not in dollars?
Let me explain you. Why do we need to go to US for buying crude?
Yes.
Because we as an importer and Aramco as an exporter have agreed that we will invoice this in US dollars.
Correct.
Right? That's why we need to go to US. Right?
Correct.
If we were invoicing this in Europe, in euros, then we would be settling this in Europe. If we invoice this in yen, right?
So then we'll go to Japan.
Then we will go to Japan to settle it.
Yeah.
So the interesting thing about the currency is that whichever currency you invoice your trade in, you have to go to that geography to settle the trade.
In today's episode of Open Dialogue, we focus on this topic and try to understand what internationalization means, how does it help both importers and exporters, and what implications does it have more broadly for all of us. Joining me for this discussion today is Neeraj Gambhir. Neeraj, welcome to the show.
Right.
So, we've spoken about why an exporter should do this, why an importer should do this, what are the benefits for the economy, and so on and so forth. But there is a very important stakeholder here, without whose concurrence this will never happen, which is the counterparty.
Yes.
The person that we are either who's selling to us or who's buying from us.
Yes.
So why would a counterparty do this?
Exactly. Very interesting and very important point. Right?
Yep.
I may want to invoice in US dollar in rupees.
Yes.
But why should an outsider
Absolutely
accept Indian rupee as an invoicing currency?
Yep.
I think you need to understand that there are many dynamics at play. If I talk in pure economic terms, the fact that an exporter and an importer have to agree to some currency
Correct.
for invoicing, whether it is Indian rupee, whether it is in the example of Indonesian palm oil exporter, I told it to be Indonesian rupiah, or whether it is US dollar, or whether it is euro, or whether it is yen, or whether it is Aussie dollar, we have to agree to some currency, right? Typically, people tend to agree to a currency which they feel A is stable, B is readily transactionable,
Yep.
right? I can convert one currency to the other currency very easily. C, I can use that currency to then do something else,
Yep.
right? So let's say if I'm buying palm oil from Indonesian exporter, the Indonesian exporter ultimately wants to have a currency which it can use.
Correct.
Using for his own imports, using for his own purchases, or using for some other purpose, right? So therefore, from this example, you can start thinking about what are the characteristics of the currency that can act as a international currency, right? An international exporter or an importer would only want those currencies where there is a use for them. And there is a global acceptability. This is called network effect, right? Over a period of time, historically it used to be pound, right? For a long period of time, it used to be British pound when Britain was a large colonial power. After that, that role got taken over by US dollar, right? Now we will see how this title changes over a period of time. But the key desire for anybody is to have a currency which is
Stable and tradable. Right. Understood. So that brings me to the next question, Neeraj, which is we want to internationalize, but what will it take for the Indian rupee to become an international currency?
So it segues into, my previous comment was kind of segueing into
Correct.
this direction. Stable, tradable, having a use in international markets, and something which you have a trust or confidence in.
Right.
These are all the various factors which go into creating an international currency. By the way, creation of an international currency which people can trust is not an easy job.
Of course.
It's a very tough one. It takes a long time for any currency to have and acquire that status. And there need to be certain defining features. So let me get into that. First of all, as I said, stable. It has to be a very stable and dependable source of value.
Right.
It should not have very large volatility associated with its prices. In fact, this is the point that both RBI and the government have been now emphasizing, that if you look at rupee over a period of last 12 months, it has been one of the most stable currencies in the world.
Right.
In the world, right? And its value has not actually been so volatile as compared to any other Asian or even developed countries. The second aspect of a currency is that you got to have a use for it, right? It may be the most stable currency, but if you can't use it, then nobody would want to have it, right? That's the place where currencies like INR Rupee have a bit of a disadvantage, because historically we were closed economies. Our currencies were not convertible. Our currencies have acquired partial convertibility over a period of time. Even rupee is now partially convertible in some senses. So for international, or for a non-resident, there is a limitation on what they can do with the rupee. And that's the aspect that the government probably needs to work a lot more over the next few years. The third is it should be easy to acquire and hold, right? If you want to hold US dollars, you just open an account with a bank in US or anywhere in the world and you hold US dollars, right? As a currency, as a physical currency also, US dollar is readily available in many parts of the world, right? That's not the case with currencies like rupee and many developing economy countries, currencies. Whether you talk about Chinese yuan, Brazilian real, all of these currencies are still very, very closed economy currencies, right? So that's the other aspect that needs to develop over a period of time. And to this end, I think the Reserve Bank has taken certain steps. I'm going to be a bit more jargonistic here. So they have allowed two kinds of accounts to be opened by non-residents. The first is what is called as SNR accounts, special non-resident rupee accounts. These accounts are basically available to non-residents for certain specific purposes, right? So that's one set of accounts you can have. Second is what we call as SVRA accounts. This is special rupee Vostro accounts, SRVA accounts, which can be opened by banks globally with banks in India, and these accounts can be used for facilitation of rupee transactions, right? But this is just I would say a first step, a baby step in the direction of making rupee universally available in some senses to anybody who wants it, right? A lot more needs to happen, and in the process, I think rupee will continue to become more and more of a convertible currency. But stability of a currency, easy access and tradability of a currency, and the fact that you have a very efficient payment system, which actually is the box that India ticks in a very big way.
Right.
Are the three defining characteristics in my mind.
Right. Great, Neeraj. So I'll take all three and maybe dive a little bit deeper. So first you mentioned is stability. So what determines stability? Like, why is the Indian rupee stable over the last 12 months? And maybe at some point it was not, right? Like 2013 it was not. So what determines stability versus lack of it?
Yeah. So as you become a country which is having a very balanced, balance of payments equation, the currency continues to start becoming stable, right? Balance means that your imports and exports are roughly equal to each other, right? India used to have a very high current account deficit. If you recall, our current account deficit used to reach in certain times as high as 4 to 5% of GDP. But of late, that has become very low, right? Last year, our current account deficit was actually less than 1% of GDP.
Right.
This year also, it is expected to be less than 1% of GDP. So current account is basically a net of exports and imports, both on goods as well as in services. So fundamentally, from a net export and import perspective, we are now self-dependent. Why we become self-dependent? You know that we have a large dependence on imported crude oil. We also have a large demand for imported electronic items. How do we finance it? Earlier, we used to be very dependent upon, export of textiles and export of gems and jewelry and export of some of these commodities. But over a period of time, we have developed our services exports.
Yep.
Right? Services exports now account for a big part of our exports. Remittances from Indian workers abroad have also become a big part of our balance of payments, right? So all these things put together have given a far more stable and sustainable characteristics to our external account.
Right.
Right? And that, to my mind, is one big source of stability of the currency.
Right.
Second, I think in some sense it has become a policy objective.
Right.
So we also see Reserve Bank a lot more active
Right.
in foreign exchange market to make sure that the currency volatility is well managed, right? And rupee continues to basically be one of the least volatile currencies in some senses.
Right.
So that should answer your first question,
Yeah.
right? Why has rupee been so stable?
Yeah. So first is the stability. The second one was this convertible. Like you mentioned that rupee is not convertible. So A, what does that mean? And yeah, maybe if you can just help us understand. What.
So convertibility has many dimensions. It is not one thing, it is multiple things. Broadly, you define convertibility on two dimensions: current account convertibility and capital account convertibility. Current account convertibility simply means that, if you as a buyer in India wants to buy something for your consumption, for your day-to-day usage, you can just freely convert your currency into dollars and buy it, right? You don't have any constraints. If you go back to 1980s, there were a huge number of constraints. We were in the era of what is called FERA, Foreign Exchange Regulation Act, right? Which later on became FEMA, a simpler version of it. But FERA used to be a very draconian act. So holding of foreign currency, acquisition of foreign currency used to be very, very difficult at the time. Steadily it got liberalized. And now for your current account transactions, you are at a stage that it's virtually convertible, right? Convertible for businesses, but also convertible for individuals. So for example, as an individual today, up to $250,000 or $200,000, you can do anything. You can go abroad on holiday, you can buy stuff from outside, you can send money outside for investments. So for you, up to a certain limit, it is convertible for these uses. You can basically buy dollars for your medical treatments abroad. Likewise, for businesses, rupee is effectively freely convertible for most export and import items.
Right.
So, except for very, very limited set of prohibited items, for most items, rupee is freely convertible.
Sure.
And for most businesses, there is no limit today on how much they can convert. It depends upon their business, right?
For running their day-to-day business, they don't need to
Yeah.
have any, there are no constraints, except obviously if you're doing something really bad, then
but there are certain items which you can't just import.
Which you can't, yeah,
Prohibited
exactly.
items are there. For example, you can't import, nuclear fission material.
Which has got nothing to do with the foreign exchange. It is just
it's
the
a
commodity
policy.
itself.
It's a commodity policy, right? So, therefore, to that extent, today we say that by and large, rupee is current account convertible.
Yeah.
Right?
Current account meaning for ongoing business
For
purposes
ongoing
and trade
business,
and so on.
for today's requirements, right? The second aspect of rupee's convertibility is capital account convertibility.
Yep.
Capital account convertibility is when you want to borrow in a particular currency, say you want to borrow in dollars, or you want to buy assets in dollars or foreign currency, right? Convertibility also means, can foreigners come into India and freely buy Indian assets?
Yes.
Or can they freely sell Indian assets?
Yes.
I think in capital accounts, there is shades of convertibility.
Right.
For most equity-related transactions, I think you're a by and large convertible currency,
Right.
right? You have subject to FDI limits and all those kind of things. I think people can freely bring money into equity markets in this country and take money out.
Inward convertibility is there.
Inward convertibility is. Outward, there are still restrictions,
Yes.
right? For debt, there are still a lot of limits.
Yes.
For debt, we are still not freely convertible.
Right.
Right? Similarly, for certain assets, we are still not freely convertible. For example, buying of real estate in India, you're not freely convertible.
Right.
In that sense, right? But if you compare, let's say, India versus US, there are a lot many things that you can freely do with US dollars.
Right.
In US dollar,
Right.
in United States.
Right.
So it is a far more, it's a practically fully convertible currency in that sense.
Right.
And rupee is not there.
Right.
So we need to bridge this gap. If rupee were to become an international currency, rupee has to become a lot more accessible and convertible currency, even for capital account transactions, than it is, for it to become a true international currency.
Yeah, absolutely. If you were a third country and you were holding rupee and now you wanted it for whatever reason, so then there should not be the process that you have to apply to somebody and somebody has to approve, only then you can kind of take it out and so on and so forth. It should be, like it's just like making a UPI payment that
That's right.
you kind of take money out of your savings account and give it to whoever you want to give it to.
Yeah, it's your money, you just take it out.
Absolutely. So that's one part that kind of we need to work on. The third one is, you mentioned this Nostro. So, and again, I'm digressing a little bit, but please explain to us what is a Nostro and what is a Vostro.
So, it's a banking terminology. Nostro means our account with you. Vostro means your account with us.
Sure.
So, when or rather Axis Bank opens a foreign currency account with a global bank, a global institution, say JP Morgan or Citi, that foreign currency account, if it's in US dollars or any other currency, is called a Nostro account from my perspective.
Yep.
So it's my Nostro with Citibank.
Yep.
Or JP Morgan Chase. Likewise, a Citibank or a JP Morgan Chase can have a rupee account with me for settling their rupee transactions.
Right.
And from my perspective, that becomes JP Morgan's Vostro with me. Right? So Nostro and Vostro. Nostro means my account with you, Vostro means your account with me.
Right. So in the SWIFT case, when Axis Bank sent out the message, JP Morgan is debiting the Nostro, Axis Bank's Nostro with JP Morgan, and then sending the money.
That's right.
And similarly, if some JP Morgan's client wanted to route some rupee transaction here, then Axis Bank would debit the Vostro and kind of do the...
Remember, Vostro and Nostro from a particular bank's
perspective. Yes. What is your Vostro is his Nostro.
Is his Nostro.
Yeah.
Right.
So two kind of final areas to explore. This internationalization is something that other countries have tried, and for a while, like Euro was one of the currencies that Europe wanted to see how it can become international. China has been talking about yuan internationalization for a while. So what are their experiences and what can we learn from them?
See, Europe in some senses was always an internationalized area, right?
Yep.
If you recall, pound sterling used to be the international currency of choice, reserve currency. Not just pound sterling, but Deutsche Mark, French franc, Swiss kroner, right? All of these currencies have been, in general, quite acceptable, quite tradable currencies in the international financial transactions for quite some time, historically. So therefore, when all these currencies converge, except for pound, into a single currency called euro, the issue was less about whether euro is an international currency. The issue was more about, can euro replace dollar at some point in time? Right? Because now euro area bloc is becoming a very big, very big economic bloc, and they have a single currency. In terms of size, they are very comparable with US dollars. So can euro do what dollar does? Unfortunately, that has not played out since the Maastricht Treaty of 2001, if I'm not wrong, right? Part of the reason why that has not played out is because, one, euro has been a less stable currency. It has gone through its own ups and downs. Second, the share of Europe in the international trade has actually steadily reduced.
Right.
So they have become less and less important from an international trade standpoint. China has become a more dominant player in the international trade over this last I would say 25
years,
years, right? So that's one reason why euro has gone the way it has gone. Even today, it's probably the number 2 currency in the world from an invoicing and reserve currency status perspective, but its share is much smaller as compared to US's share. China was never an international currency. China was always a closed economy.
Correct.
And stayed a closed economy for a very long period of time, right? Its participation in international trade was always much smaller than the size of the economy. It's only since 2001 when China joined the WTO, World Trade Organization, it started to internationalize itself. It started to become a part of international trade, and it actually did it at a very, very rapid pace. So much so that today, a large part of international trade happens with China. But even still, even then, it is domiciled in non-yuan currencies, largely again US dollar.
Right.
So same dynamic that is at play in our case. China also wants to have its currency to be used for international trade transactions, right? And it has very similar challenges to what India has. Yuan was never freely convertible. It still is not, right? There are a lot of restrictions on what you can do with yuan. Foreigners can't freely hold Chinese assets, right? You can't just go ahead and buy a Chinese bond or Chinese equity or Chinese real estate, right? It is a heavily controlled currency. It's far more controlled currency than rupee is, right? So China actually tried very different way. China went down the Hong Kong way. When Hong Kong became a part of China, it was transferred from British to Chinese. They actually tried to create a offshore yuan market in Hong Kong. Because China has been a communist country, right? And Hong Kong was a financial center in some senses. So they thought that instead of actually doing everything in the onshore market in the mainland China, they would rather run this experiment and do it in a limited way in Hong Kong. That experiment succeeded for some time. A lot of so it's funny. The Chinese currency yuan or renminbi is typically spelled as CNY in banking parlance. So the currency that they started in in Hong Kong was also yuan, but it was called CNH.
Right.
So CNY standing for onshore, and CNH, H stands for Hong Kong, for the Chinese yuan that trades in Hong Kong. So there were 2 Chinese yuans, one for onshore, one for Hong Kong. And the Hong Kong Chinese yuan was very convertible. It was, again, the idea was that over a period of time as CNH becomes more dominant, they can merge the two and effectively have a convertible currency. That experiment has not really succeeded as much. And part of the reason why that experiment has not succeeded is geopolitical, right? As US has started to isolate China a lot more and has become a lot more conscious about Chinese dependence, right? China has itself scaled back a little bit of its ambition of internationalization of its currency. Not that they don't want to do it, I guess they still want to do it, but not at the same level of intensity as they were doing in the past. The key lesson for all of this is that internationalization of a currency or its acceptability in international trade and from an international assets perspective is not just a function of, there are many dynamics, there are many things at play, right?
Yep.
Most importantly, it's how big a player you are in the international arena.
Right.
Particularly from a trade perspective. Right? India's share is just about 5% of global economy. So we're still relatively much small. Second, what is the geopolitical standing that you have in terms of your associations, your affiliations, etc., and what the global geopolitical equation is looking like. That also plays a very dominant role in internationalization of currency. Third, of course, is the whole aspect of the economic aspect of stability of the currency, ability to do transactions, convertibility, ability to own freely, etc., etc. So those are all operational aspects of it. But I think the international standing of a country, size in global trade, geopolitical aspects, they all play a big role in internationalization.
Fantastic. So just kind of again to summarize what you said, if I have to trust, I meaning not as an individual, but let's say some country has to trust Indian Rupee, they have to trust firstly the overall economic policy of India, because if India does something which is reckless, then it will directly result in the rupee itself kind of being very volatile. They also have to trust the jurisdiction of India, in the sense they have to trust India as a country, not just as an economy, because if you don't trust the country,
Why would you
why would you do
its
it? And maybe
its
tomorrow
currency or its
India
assets? Yeah.
somebody comes and says, boss,
yeah.
I'm not going to honor this thing, then you are again in the soup. So they need to trust not only the economic policy, they also need to trust you as a reasonable and how should I say, trustworthy geopolitical player. So there is that angle as well. And I guess the third one is that this is not a event, right? It's a process. It is something that it won't happen.
Overnight.
We won't kind of wake up one morning and suddenly it will be done. It is something that will take many years, because trust doesn't get built overnight. It's something that gets built over a very long period of time, and so we'll have to be a responsible player for a fairly longish period of time.
And in that context, I must say that of late, India's record has been quite good.
Exactly.
Right?
Yep.
So first of all, we've had a very solid macroeconomic outcome. I think since COVID, I think we've done reasonably well as an economy. We are today the fastest growing economy in the world. Our banking system is very robust. Inflation is low. We have a significant consolidation of fiscal deficit that's happening. Remember, the whole world is facing a fiscal deficit problem, right? And in that sense, the amount of consolidation that India has done is quite good. Quite good, right? So all of these parameters are slowly falling into place. We also have a very stable government. We've had now almost 3 decades of continuity in our financial reforms and opening up of the economy, right? We also have a situation where, while the governments at the center may have changed, our path of opening up of the economy and financial liberalization and economic liberalization has not changed. So which basically means that there is a very broad consensus in the various political formations of which direction to take as far as the economy is concerned, and that's a very important element for a currency. Therefore, in my mind, I think we are on the right path. But like you said, it's not an event that happens overnight. It's something which will happen over a period of time as international community gathers more confidence about our economy and our currency.
Yep. Final question, Neeraj, before we close, which is, let's assume that rupee becomes international. Now that has implications for us as an economy, and it places some responsibilities as well, I presume. So what are those?
I think implication is that effectively foreigners are now willing to own rupee as a currency, which allows us to finance our own fiscal deficit and our own current account deficit in our own currency, right? Without getting subject to international exchange rate vagaries, right? That's clearly one key benefit of this, which basically means that you are, in some sense, it goes back to if you recall when we did the currency discussion, the physical currency in your wallet is a zero interest loan that you have given to government of India, right?
Correct.
So the more currency you own, the cheaply the government finances itself. Right? You can extend that argument to internationalization as well. So if international players are willing to hold rupees in their wallets, which happens in the case of US dollar to some extent, well, you're cheaply financing yourself, right? Both from a current account as well as from a fiscal deficit perspective. But also it creates a certain amount of standing for yourself in the international environment.
Of course.
Right? Today, US is a strong political power also because US dollar is the currency of choice as far as trade is concerned and as far as reserve is concerned. So your political power, your economic power and power of a currency in some senses go hand in hand, and it's also a stature in that. So along with stature comes the responsibility, right, to be a responsible power. So I think that those are the aspects which kind of come into play once you reach that status of internationalization.
Right. But also I think on the responsibility side, Neeraj, then it means that certain, let's say, if the government wanted to spend a lot, uh, it could not freely do it because it could then impact the rupee. So maybe there is a little bit of responsibility,
Of
whatever,
course,
right? Some
of course,
constraints that come.
of course. I mean, if you're, if you are an international currency and you start behaving irresponsibly and you start, in some senses blowing up your fisc,
Right.
That's not going to be,
Right.
good from.
Right.
And by the way, that is the issue today with US dollar.
Right.
Because US government fiscal deficit is growing at a very rapid
Very
pace.
rapid pace, yes.
And people are getting concerned about whether this is sustainable or not.
Right.
Which is putting a question mark on the US dollar as a reserve currency. Of course, at this point in time, there are no viable alternatives.
Yep.
But you can't take this status for granted.
Yep.
You can't take the status for granted and misuse it. You have to be very, very responsible about it.
Great. Great, Neeraj. Fantastic conversation. Thanks a lot for spending time with us. We spoke about what internationalization is, and there we spoke about the trade angle and also the asset angle. We spoke about the benefits that it can bring to exporters, importers, the government, and the country at large. We spoke about the geopolitical angle, particularly how kind of reducing dependence on one payment system from a risk perspective could be much better for us as a country. We also spoke about what it takes, which we spoke about stability, we spoke about convertibility of the rupee, we spoke about geopolitical responsibility and so on and so forth. And we spoke about the learnings from China, Europe, etc. Wherein one of the big learnings is that all of these need to be there. Plus, this is something that is, we'll have to kind of prove ourselves over years for us to gain that stature. Thanks a lot, Neeraj, for spending time with us.
Pleasure. It was a wonderful conversation.
Thank you.
Thank you.